Okay, we are live, and since I, Tevis, am late, I'll be fixing everything while Roy talks to you guys. So this goes here. This
and the background and everything like that. So you're back from the Vatican, being the financial advisor of the Pope.
Yep.
And hope that he invested in BMNR and hopefully Robinhood.
Yep.
Maybe some SOFI too. So first one of these we've done when you're not in a completely different time zone. You're just 1 hour off. So we're hopeful to get back on schedule, by the way, guys, for Tuesday. If you're just tuning in with us, we do take questions at the end. We try to do a rapid fire. But here on the forefront, we got a few different topics. Of course, we're going to talk Tesla and Tesla deliveries. We will also talk some Micron, which is a different name for us, and OpenAI and what they're doing with DRAM, which is absolutely crazy. Spilling into air test systems. Yes, I do like to talk my book. BMNR and the cult of BMNR. We'll talk about that too. There's some news there. And I'm missing one. Of course, SoFi we're going to mention and talk about a little bit about Derek White and level and options too. Netflix cancel wave and Jeremy taking a short position or looking to take a short position anyway on Robinhood, on Palantir, and on Tesla. So those are the topics tonight. Tevis, where do you want to start?
We can start wherever you want to start. I am still promoting this episode. I'm just going to retweet the original post. I think I want to save BMNR and SoFi for a little bit later on in the stream. So maybe we can start with one of the smaller topics.
Okay, I've got it. Yeah, I've got a super small topic here to put up, but I'm also going to retweet the bootleg. It's a little bit different time. Yeah. There we go. Okay, so this is one that I didn't even mention, but it's worth mentioning here. And if you don't mind letting me share this, Tevis.
Yes, sir. Just one sec. Let me pull you down here, actually, so I can see you. There you go.
Okay, perfect. So then all the way to the top. I've seen this now a few times circulating the news reel. Trump has talked about this in the past, actually, shortly after they enacted the tariffs. His administration had said, hey, we can even use some tariff money and send everybody a bribe. I mean, a stimulus check. Now, it's not just President Trump saying this. There's also a Democrat congressperson from California, I don't remember his name, also saying, hey, $2,000 stimulus checks, let's do this. Well, you guys didn't see my response. It's not because I don't like money, but yeah, it's last time when this happened. I don't know about in Canada, but here in the United States, Tevis, economists did their best to try to show new math that if you print a whole bunch of money and you give people a whole bunch of money for free, which, they were forcing people not to work. So I wasn't like horribly opposed to it, but they said, oh, it's not going to cause inflation at all. I don't know where they went to school. I don't know where they got their degrees, but those degrees should have been rescinded. So I'm kind of curious. Do you think that people are just forgetting that conveniently or just greedy for the 1,000, 2,000? Is this a election bribe, or is new math going to show no inflation from printing a bunch of money?
I mean, yeah, like the printing a bunch of money has been the default state for quite a while now. Am I lagging? I shouldn't be. And I don't think it's going to be any different this time around. I think everybody abused the heck out of the COVID stimmy checks, and especially like the businesses that were given benefits. A lot of them really enjoyed that, but at the same time, markets pumped because, again, it was free money that people were giving out. So I think like it's deja vu from that perspective. But don't forget that the Fed has been, they've been printing money for a while now through QE. And none of that has been going to the half of the population that doesn't invest in the market, right? And so I can understand the populist appeal of just handing it out directly and winning some brownie points when it comes to the next election cycle, whether that's, midterms or the actual, next election for Vance or whomever. I don't necessarily agree with it, but I also am not surprised because I think everybody is kind of hurting right now as a result of the unsustainable printing that was really accelerated after COVID. And in fact, it was a K-shaped recovery in the economy, whereby you just had a deteriorating middle class, right? You had the people who had assets seeing their assets appreciate in value significantly, whether that's stocks, real estate, whatever, even gold. And then you had the people who didn't own assets, whom life just got way more expensive for. And so, like, I get where they're coming from, and I would understand the like broad market appeal of people getting free money. I think that's been the sort of tantalizing effect around UBI specifically. I just don't think that it's sustainable, but at the same time, like, it's just a matter of time until this thing really blows up. It's a feature, not a bug. Ever since you got off the gold standard, it's been a ticking time bomb, so to speak. And you can kick that can down the road, but at some point or another, whether it's our generation or our children, probably ours, honestly, there's going to be some type of event that's going to lead to a destruction of wealth. And whether that's a war, whether that's, whatever else, it's going to happen unless you have Elon's plan of like, oh, the robots are going to, grow us out of this insane system. And quite frankly, if you asked me, like, very candidly, I would put way more odds on some massive geopolitical event destroying mass wealth across the world and resetting the system at like 4 or 5 to 1 odds than robots being here in time to save the day.
Yeah, this is like one of those things where it's like, I understand there are people that are hurting, like legitimately. Like if you like, okay, so just the last time during COVID, we would have been okay without the money, but it's like, well, if the government's giving it out, like, I'm going to take the amount that's supposed to be coming from me, no less, no more. And a lot of people invested. Of course, markets did really well. But if you didn't invest, you just spend it on stuff, and probably that's all gone in a distant memory. And that's kind of the problem is it for some people, like $2,000, especially if it's $2,000 per, depends on what this looks like per family, makes a difference. If it's per person, that makes an insane difference. But you're paying for it on the back end if inflation reignites, which it will. I mean, you just have it's supply and demand economics. If you have a whole bunch of demand all of a sudden, yeah, it makes our economy look really good, but we pay for it later with inflation. And the worst thing about inflation is it's a regressive tax. It impacts those that are low earners, that are not invested in the stock market the most. And so, like, the people that this would help the most is also who it would hurt the most on the flip side. And I hate it. I hope it does not happen. It shouldn't happen. We shouldn't be talking about this, especially while the national debt is ridiculous and unsustainable. If we had plenty of money and this was a surplus, $37 trillion or whatever it is now, surplus that's just sitting there, like, okay, sure, yeah, let's use some of that infrastructure, education, let's fund investment accounts for children that are just born, let's give some stimulus checks very carefully to not ignite it. But no, we're not there. And so I don't know. I'm very nervous when I see it, Tevis, from both sides, where the Democrats and also the president are like, hey, let's do this thing. It's like, could we not?
Well, you know what unites both sides, Roy? You know what's truly bipartisan? Money. They
Yes.
are both financially motivated to do this because it pumps their own bags. I am financially motivated for the government to do this because it pumps my bags. And yet I'm saying, hey, it's actually bad for the underlying economy. Now, I mean, to this point, everyone who put the 2020 stimmy in Bitcoin is pretty happy right now. It's actually a really great idea. Like, okay, if you're going to hand out money to everybody, instead of just handing out cash, why don't you just put it in a locked account that you open for everybody and they can't touch it for a while and they can actually see that money grow? Now, that would have much less populist appeal because people can't spend that money and they're like, dude, I'm starving. I need groceries. I need to pay the rent. Screw this investing thing. But at the end of the day, like, you have to do something to slowly, if not completely revert, at least slow down the degradation of that capitalist system.
Yeah. Okay. So before we pivot away from this topic, let's say this happens, Tevis. First, where do you think the S&P 500 goes? And second, you of course wouldn't be getting this money because you're not the 51st state yet. But if you were given free money, $2,000, and you were to invest it in one thing, what would you invest it in?
Okay, so first of all, this is not financial advice. Please don't do this.
I'm taking it as your financial advice just for me.
No. Actually, hold on. I think I have a banner for this. There you go. So I would. I mean, this is Tevis you're talking about. This is why you come to the Bootleg Weekly and why you come to this channel. I would absolutely buy some call options with that $2,000, probably on Nebius or on BMNR or something similar. Yeah, honestly, man. So actually, fun story. So I think I told you this on the last stream that like my one aunt who I always talk about on the stream, who basically like tripled her portfolio because she got in at HIMS at $25 and she got in at SOFI at like $10. She'd been telling my mom's other sister about her portfolio, and so my other aunt came to me and she was like, hey, I didn't believe you back in December when you came back home for Christmas, but this time around I really want you to open an account for me. And I was like, okay, cool. And so she like sat beside me while I opened an Interactive Brokers account, and she put some money into it. So I put her portfolio, Roy. And first of all, I asked her, I was like, what's your risk tolerance? Like, how long do you need this and this and that? And she's like, dude, I don't even want to know the password. Like, this is just whatever. Just put it wherever you put yours. And I was like, okay, great. I made her account 80% Nebius, 20% HIMS, and she put like 5K or something like that. And then she put another 3K. And then today she's like, I put another 3K. And I'm like, okay, great. That's fantastic. I opened her account today and she was up 30%. Her account is 3 weeks old.
That's awesome.
And I was like, hey, so-and-so, you're 10X better than the market. She's like, I don't know what that means. Like, and so it's like, I think what we would do is kind of crazy relative to what the rest of the market would do. I was talking with the HIMS weekly guys. I was talking with Nate and with Elijah, and I was like, hey, Nebius is doing really good. They just got a $500 something price target from a firm. And I was like, loving it, guys. And I think Nate put up his portfolio was like 100 something percent year to date. And I put up mine. Mine is like 78% year to date. And then Elijah put up his, and his is like 200% year to date. And I'm like, Jesus, like you feel like you're underperforming if you're up 70% year to date. I'm not surprised that people are throwing up all these screenshots. Now you're asking me what's going to happen, Tevis, if the government starts printing money and just starts handing it out to people. Well, have you been here in 2021? It's going to be the exact same thing. People are going to just degen on random shit coins and NFTs and anything that gets the fastest dopamine hit possible. And so I don't think it's good for the longevity of the market. Will it pump your bags in the short term? Absolutely. And so that's why I would probably buy some call options.
Yeah, I would buy. I'd put all $2,000 in BMNR leaps or vertical spreads. You got to do options. Maybe is it BMNU, the double levered leaps. Again, this is not financial advice. This is just what I would do with free money that I'm going to have to pay for later because of inflation. No, I mean, I think we know when there's more liquidity. And for some people, that goes immediately into the market. For others, it's just going out to buy the next shiny object or to pay off some debt.
Yeah.
But yeah, BMNR for sure. S&P 500. I mean, could we look at like 8,000 S&P 500 before?
What's it at now? Like 6,800 or something?
Yeah. 7,000 is a lot of people's end of the year targets. So.
I mean, man, I don't know. Like, it's crazy because you have half the people I see are saying this is super toppy, and they were saying this for a couple of months now, and now they're like, okay, well, this is really, really toppy. And then other people are saying, well, you have the rate cuts and you have all of these, stimulus and all these other like tailwinds that you can go much higher. I don't even know what to make of it anymore, honestly. So I think what I'm doing personally, and again, I don't want to put up the not financial advice banner again, but what I'm doing personally is I'm just running the wheel. And if I get called away, I get called away, and I'll write some cash secured puts. But I might not be capitalizing, 200% on my portfolio year to date like Elijah is. But what I am doing is I am locking in gains along the way, bits and pieces here and there. And I'm also getting paid a crap ton of premiums for a lot of these super volatile names. And so, like, I'm fine if I can go all cash right now and end off the year 80% up. Like, that's fine. I'm not really sad about that at all. But at the same time, I'm trying to be a little bit more cautious. Like, I have about 15% in cash that I'm running that I'm using for cash secured puts, and then I also have covered calls. And so my positions fluctuate a little bit more than they used to as a result of that. And I might be leaving some upside on the table as a result of that. But at the same time, I don't know when that music's going to stop.
Yeah. Paul said, "Don't lie, Roy. You would buy I think he meant PayPal." Honestly, that wouldn't be the worst thing either. Like, I think BMNR absolutely would outperform it. There'd be a lot of plays that would. The one thing about PayPal is it's inflation proof. It doesn't its transaction fees are based on a percent. So it doesn't matter what the percent of that is. If the price is higher, they get more money. And that's actually a net benefit for PayPal too. So, and of course, the government uses them oftentimes for stimulus checks and those sort of things too. So they would benefit, but no, it'd be BMNR. So speaking of BMNR, a couple of things. Of course, today was a good day for BMNR. It went up a good bit, about 7%. I thought this was really interesting. So 7x more Ethereum was bought by digital asset treasuries in the last 3 months than issued in 3 years. It went up 108% in that time. Where will it be in 3 years? And there's rampant buying here. Of course, BMNR is a big part of this too, but there are other Ethereum treasuries out there and ETFs that are, and this is just digital asset treasuries, that are buying up all that they can, which when you have institutions, when you have individuals, when you have companies as well, digital asset treasuries doing this, like, it's just really good for sales pressure on the upside. And then I thought that this was also an interesting piece, more related to Ethereum than BMNR. And I didn't know exactly what this was at the time, but I was staking, I bought some more Ethereum 2 days ago, and I ended up staking it, or maybe it was yesterday. And I was like, man, the staking times are really long now. Like, Robinhood's like, oh, it's between 8 and 60 days to stake. And I'm like, what now? Because it's always been, not real quick. Solana's really quick. Part of it, entry is up, and actually it's more like 3.2 days for entry. For exit, it's at this point it was like closer to 35 days. And a big part of it is, like, basically a validator had to go through the process of unstaking because of some regulatory stuff, and that they were hacked at one point. So it's not showing like there's a massive exit, but that was just shocking when I saw 8 to 60 days. This front side of the actual staking, it's showing that there's demand, and there's still demand. And I think as Ethereum keeps going up, we did briefly cross 4,500 earlier. I don't know if it's still above there today. Let's see. Oh, that's not it. But yeah, regardless, BMNR. And a lot of what I'm doing too, it's just under 4,500, by the way. A lot of what I'm doing is the same thing as UTEVIS. I'm taking advantage of the volatility that's there, which uniquely is good for the stock, volatility and also liquidity. But it's also really good for selling options. So I do have some BMNR that I'm more careful and cautious with, and I'm building a long-term position. But I'm using the premiums largely just to buy more BMNR. Of course, I have some spreads as well. Got to be degenerate. So,
yeah, I think, well, so is the extended timeline to get out of the staking as a result of the Ethereum price rising?
No. So the way that it works is they have a certain number of validators that are allowed to either cycle on or cycle off during each. Not having, I can't think of the word. There's the short events that they have in Ethereum. Somebody will have to help me out with the term. And so they only let so many off. And so if there are something like this, there's a major wallet, major validator that has to unstake for some reason, then as a result, they have to kind of crowd the exits, and they'll just a chunk of this will be processed over time. Now, one nice thing is this is not. There's probably a little bit of people that are just freaked out because of the price action. They're like, "Oh man, we're not above 5,000. I'm gonna sell," and then they realize like, "Oh, it's 20 days to unstake," and so they're probably thankful that they didn't get out when they wanted to. Normally at the bottom. But it does serve as a device for that. But the main reason why that's there is just to make sure that the chain is stable and that people are not flying out. Now, it can also do this too when the yield of Ethereum is more attractive when it's not being staked, but instead being lent out in liquid staking pools, a couple other pools as well. That's not really what's going on here, though. Maybe just a little bit. Mm-hmm. So not really a concern, but it is interesting.
There is so much to love about BMNR. I'm after this video, after this recording, I got to record a video on BMNR that I've been procrastinating on for like 3 days, and I've just been hoarding all of these like ETH and BMNR posts that are just so incredibly bullish around the liquidity. Here, maybe I can throw some of them up. Like just looking at this, of course. When you look at something like Bitcoin, it blows Ethereum out of the water, but this is all altcoins here. But you can see the volume of Ethereum relative to others. There's so many things. And the fact that BMNR is acquiring so much ETH at a regular interval, way more than any other treasury. Like it's just so clear, especially because there's seasonality in regards to like the seasonal tailwinds that you have in the winter, starting in October and also in November across both Bitcoin and Ethereum. Like there's a lot to love. And I think I've been irrationally bullish on BMNR this past month.
I mean, like, look at this. The BMNR, through the whole dip, they just kept buying. And SBET, I like SBET. But they were pretty much dead in the water. They'd spent most of their capital. They did acquire a little bit of Ethereum, but it's basically what they were able to gain from staking. They have, liquid staking pool, but also like the traditional staking too. Now they're actually trading, or at least they were yesterday. They finally got above MNAV, just barely above it, versus BMNR. Like their greatest asset is basically their ability to monetize the capital there in the stock and use that to buy more of the underlying, which is undervalued relative to the MNAV of BMNR. So they can keep doing this. Of course, if there's a point where they trade well under NAV, they'll be buying back their shares instead of buying Ethereum. So, yeah, I mean, that's to be expected. Not that there's going to be some volatility there. If they start trading under one MNAV for a while, and we're not seeing them buy back shares and they're just kind of sitting there, I'll be a little bit perturbed and concerned. But yeah, no, that's not like you can look at MicroStrategy. That's a nice thing, is we actually have a proxy to figure out a little bit different strategy than Ethereum and BMNR, but you can see that MNAV is very volatile. And I expect that it'll actually probably keep increasing at an accelerated amount as Ethereum rises. So if we're looking at like 5,000 or 6,000 Ethereum, like just the undervalue, the NAV is going to increase by itself. But I mean, this is basically a levered bet on that. So it wouldn't surprise me to see it get near MicroStrategy valuation as far as the MNAV, which is 2 times.
I'm wondering if you saw this, Roy. In the last 4 years, Ethereum supply has inflated by 3.89 million ETH. In the last 2.5 months, the strategic ETH reserve has acquired 3.9 million ETH. 4 years of issuance locked up in a little over 2 months. No one is bullish enough.
Supply and demand. Yeah, but I agree. No, like, I don't know about Tom Lee's targets for price and everything. Like, crypto is just harder unless you're using just pure TA and that's all you use to value.
Yeah,
there is value though. And it's pretty clear that there's a lot of demand and the supply is not going to be enough. That's very good for buying pressure.
Yeah, and it's so I think just to summarize, one of the reasons why I am bullish on BMNR and Roy and Tanner and a lot of people actually across the retail investment community is, I'm bullish on the prospects of the underlying Ethereum over the next several months and possibly much longer term than that to become that utility layer for institutions. And on top of that, I'm bullish on BMNR specifically within that Ethereum ecosystem to capture more and more share as that treasury of choice for those same institutions. So there's really a multiplier effect for investing in BMNR, at least as I see it, is because you're bullish on the vehicle, but you're also bullish on the actual, method itself.
Yeah, and you and I, we both own Ethereum too. So it's not just we're selling all of Ethereum and doing the double levered BMNR and then leaps that are way out of it's like no. There is a space in my portfolio for a little bit of that, but I'm not like a well like you, Tevis, but it's large enough that I would be very uncomfortable and not be able to sleep at night with that level of degeneracy. So,
Yes.
All right. Anything else from BMNR?
I have learned over the years through much trial and error to sleep with a high level of degeneracy and sleep like a baby. So we'll see. We'll see what happens. But I think, I don't know. I think October is off to a good start, and I think it's going to stay that way. I mean, if we're looking at a market pullback, really, I would say the wild card is some geopolitics. Like you've been seeing escalation in the rhetoric around foreign governments, and that's not something that I want to see. Market doesn't seem to care all that much. The market seems to care about economic data, about inflation, and about jobs, which I understand there's a more direct impact. But if for some reason somebody gets hot-headed and drags the world into yet another conflict, I think that is not where you want to be. Because right now, half of the market that's calling the top is looking for any reason they can to possibly sell.
Yeah, and I see some comments in the about recession or possible recession and shutdown as well. Government shutdown usually doesn't really impact recession at all or recession odds. It just doesn't. These are short. I think average shutdown is 8 days. Now, if it goes on like 3, 4, 5, 6 months, that will have some impact. So at that point, that's when we can really discuss it. One thing that's really, really bullish, and it's macro stuff, but it relates to Ethereum and everything else in the holdings too. The last jobs report they received was pretty soft. They just cut. They showed that they were open to cut as well, that there's some concern with the labor market. We're not going to get any more of those jobs reports until the government is back open. And so if the government continues to be shut, I think that they will probably cut at least 2 more times this year. They almost have to, just out of caution. So unless we start talking about stupid things like, hey, let's give $2,000 stimulus checks to everybody. You know what? If 2,000 is good, let's just make it 20,000 everybody. So if we do that, then it ruins that whole theory.
How about we just say, fuck it, and make it 200,000 for everybody, and just everybody's rich now, guys. Enjoy your Lambos.
We're all millionaires.
Yeah, exactly.
And we can't afford food. Can you throw up Curtis's comment at 658, the 10%? So the goal, it's called Alchemy of 5%. So the goal of BMNR is to get 5% of Ethereum. It's 6:58 Eastern time, should be. There you go. So once they get that, I actually have a separate video on this.
I think this is a question, Roy. Curtis is cutting the line here, but
yeah. It's related to BMNR. So the goal is 5% Ethereum. We don't know for sure what they're going to do afterwards. There's indicators in their SEC filings as far as what the actual strategy is, and one indication in the investor deck too. I have a separate video on the subject. I think it's my most recent BMNR video. It's something like what happens when they get to 5%. That kind of details that. It looks at the possibilities. Some are stronger than others, but one thing to know about BMNR, kind of like BTBT as well, is they have multiple different business lines. They do have like a minor thing, like look into that, but they also hold some Bitcoin. They hold WorldCoin. I think they'll buy some moonshots. They'll probably buy some more Bitcoin. They'll get above the 5% just because inflation is Ethereum is not a finite supply, so they won't want like 5.0000%. because then the next day they actually have under 5%. They'll get like 5.5 or something, and we'll just have to see beyond that. But I go through it in more detail, showing you what it says in the filings and prospectus as well.
Yeah, and for the rest of you plebs, when you ask questions, we're going to answer them at the end. Thanks, love you, bye.
Unless you pay money.
Yeah, unless you pay us 99 cents. Okay,
so
what,
let's hold off on SOFI for just a second. Let me throw this up.
After hours, let me see.
And this one, if Tanner's still here, I don't know if he's seen this, but
Tanner's too good for us, bro.
It may cause him to also be pretty excited too. So this is more beneficial to, Micron, Samsung, Hynix are like the big three when it comes to RAM. OpenAI demand for RAM. So DRAM. With a lot of the AI chips, they basically can build DRAM right into it and stack them very, very deep. Very good, Josh. OpenAI is requiring 900,000 WPMs of DRAM demand by 2029. And this actually comes on the back of a few months ago that NVIDIA said something to the effect of, we need more DRAM. Send us verified stacks, basically that they've done whatever testing or burn-in type of thing that they need. This is an area of shortage. HBM, of course, is a big growth lever there for DRAM. I don't understand all the technology or exactly how this works. I just know that what this basically does is this showcases the demand. Like, this isn't them just saying, hey, we need memory and let's call it good there. This is very much integrated with their AI chips and the data systems that they're running, the databases. But beyond that, it's also showing the complexity that's happening with these individual chips. And so this is, I think Samsung, SK Hynix, and Micron, which we can actually invest in, are all big winners from here. And you can see Micron's up huge. But there's also a lot of other winners as well. And one of those is, I think, Air Test Systems, just because they're actually getting into this product line. They talked about this back in April as far as testing at the wafer level. Right now, they can test memory, but it's in a packaged part system. All that means is that they have the assembled whatever it is, and then they can test that whole thing, which is the dumbest way to test things if that's the only testing you're doing, because if it fails, you throw out the entire thing. And in this case, you're talking about, maybe a couple $1,000s of AI chips and multiple $100s of DRAM that's stacked there. That's an expensive waste, not the best way to test it. So they offer testing at the wafer level. They're not the only ones that do that on this product line, but as AI, as complexity from AI demand actually ramps, you're going to see more and more very novel types of chipsets, including silicon photonics, which the more complex, the more varied that they are, the better and the more important it is that you have the burn-in tests, the validators at the end that basically make sure that the product actually works. Because data centers, for one, they can't tolerate a lot of failure as far as their chipsets. So I thought that this was really cool and interesting, just because it's one of showing, at the very least, if you think that AI is fake and that it's just all a bubble, the demand is very real. And the demand is because they can't keep up with the demand from consumers and businesses as well. There's a lot of winners from this. There's a lot of ways to play it, but it is not fake. So I would not bet against this trend.
Sorry, why does it say by 2029 there? They're buying it in anticipation of future demand?
Current demand and future demand. They're wanting to lock in a bunch of contracts right now. And usually that they need to do it this way, because when there's a massive scale up of what needs to be actually produced, which is exactly what's happening with DRAM, they can't just say, okay, well, we'll just order, what we need for right now. No, the reality is there's so many people that are pouring into this, that are demanding DRAM that's validated. There's just not enough supply that can be made under existing units. And so you have to give time and book those orders in advance so that you have capital as well. For Samsung, for Hynix, for Micron, and others. There's a lot of smaller ones too, to be able to ramp up production, and also not just ramp up, but do it. It's not all about numbers, but there's a failure rate. I don't remember. There's a certain percentage failure rate, whatever it is. Validating, testing, doing the burn-in at the wafer level can improve unit economics immensely. and you're looking at maybe a 3 or 4% less failure rate as far as units that are coming, not less. You're removing from the pool 3 or 4% what you would normally test in a package part system instead of an individual level. If you're doing it at the wafer level, one big sheet, in this case, multiple big sheets stacked together. AEHR, again, is not the only one that does this, and they are reporting on Monday, so I do expect that they'll comment on this. They basically said that their DRAM test system sounds like it's ready to go, if not already ready to go. Like they talked about finishing up this previous quarter. It is very soon, and so we'll get an update on that. In addition to all the other stuff, that's just like a new product line. Everything else that they're doing is going pretty well too.
Yeah, that's great about testing. I was just checking who is playing tonight. People are asking around football that's starting in an hour. Yeah, I mean it's interesting. I don't think anybody is calling AI fake or well, I mean, okay, let me clarify my stance. There's nowhere that I'm saying, oh, like AI is BS, that like people are making it up, that it's like a Ponzi scheme or whatever. I'm just saying, what is the degree to which we're counting our chickens or whatever that expression is, like before they hatch, or eggs? I don't know. Like what is that degree to which we're accounting for future growth when we don't really know how long that roadmap is and where like the headlights stop and where the road ends, right? And that's the thing that I'm just cautious about, because I think that there is a long runway, but the market has already priced that in and then some, right? And so I just, and that's just purely as a result of us being in a bull market right now. Everything is inflated, and AI, which is like the new buzzword that, like, my freaking janitor at work is talking about AI. Then I'm like, okay, well, it's out there, man. Like the secret's out. There's no alpha. If everybody thinks that AI is going to change the world, like what is really that threshold of that TAM? And I think that there's still more to go. I just don't want to, blindly be throwing everything I have at it, because I'm not very sure in my footing. I don't know if I'm making sense.
So what do you mean by it? Throwing, like, you wouldn't just want to be in AI names, or
I wouldn't want to. Yeah, exactly. And I am in Nebius right now. It's like my third largest position, just not because I made it like my third. It just ballooned to be my third largest position, and I'm very happy I'm in Nebius. It's one of the most bullish things I'm in. Like I just told the story about my aunt's portfolio. I put 80% of it in Nebius, but the point is, I can do it for her because she has a very small portfolio, so it's a very small bet. But for myself, I'm just like, oh man, like that's a little bit worrisome, because I don't necessarily know, like, yeah, the stock is going to go up, but I don't know, like I can't see the end of the road almost.
Yeah, I think, I mean, like, so the AI wave is so broad. It's not like whatever weird NFT wave there was, or like even like EVs, like that's probably a better correlation going back to 2020, 2021. Anything that touched EV or related to EV, including air test systems, by the way, because they do silicon carbide testing, and a lot of that's related to EVs, did phenomenally well, got the market's attention, captured the narrative. But there was still a lot of spin-offs, like beyond, like, okay, beyond the EVs, like what about battery makers? Okay, well then those did well. And what about charging stations and energy infrastructure? Okay, that did well. What about the cable and these rare earth elements that go into these things? Well, then that started doing well. And so I would argue that AI is even more broad. And so there's likely dozens and dozens and dozens of ramifications of the shift in AI, which really benefit investors, which no one really has thought of, or not many people have thought of, that the market hasn't captured. In case in point, like, throw this up, please. This is Micron. Micron is pretty cyclical, and it's the name that a lot of people are familiar with. But until like relatively recently, like it was up 36% in September 4th. We're talking about in the last month, it's gone from that to up over 100% year to date, just because the market is now understanding what some people were talking about last year, and I didn't invest based on it. I didn't fully understand it, and I tend to invest in things that I feel like I have a good understanding of. But they were calling for it back here, where they're like, "Hey, this is a great opportunity," and it sure was. So air test systems for me is like one of those where I'm like, the market was sleeping on this. Now I don't think it's sleeping as much. I still think there's a lot of upside, but I was buying it in the teens.
Mhm.
Energy, is one of those plays where a lot of those energy plays have run, like Oklo. They've done very well, but there's still like a lot of energy plays that have not an opportunity there. There's ramifications as far as like, here's how AI will impact the web, it'll impact software, it'll impact this business, that are just not fully digested yet. So, but even if Tevis, you're like, okay, I get that, new technologies that create a lot of opportunities. Even with Nvidia, like, I don't think Nvidia is insane here. I don't think it's crazy here. I don't think it's overpriced or overvalued, and we're here like right at an all-time high again. I think that there's a long runway on this. Now, this isn't a like Nebius where it's going to go up, possibly 50, 60, 70% for the next few years.
Yeah.
If it's a bull market remains intact and there's no issues.
Yeah.
But this is a pretty sure and stable bet in my mind that'll outperform the S&P 500 over the next 5 years. So
it's interesting, Roy, because like, okay, to throw the EV comparable, and I hate making these arguments, man, because like I always come off sounding like a bull when I'm really just trying to sound cautious. And cautious is taken in a bull market as, like I might as well be investing in the freaking Dow Jones, like, so to go back to your EV example, the way that I see it now, and this could be correct or it could be incorrect, is how EVs were back in 2021, where there was like 20 different EV companies popping up left and right. And what do you see now is you see maybe 4 or 5 pure EV plays that are well capitalized, that actually made it through and are probably going to end up being the ones for the next 2 or the next 5 years, right? Like, I don't think, well, we know Tesla's not going to go away anytime soon, right? I don't think NIO is going to go away anytime soon. BYD is going to go away anytime soon. Rivian's going to go away anytime soon. But like, do you remember Workhorse? Like, do you remember some of these companies that just faded into oblivion because it was EVs were like the thing, and everybody, just the mention of EV company immediately got funding for everything. And so I think that like that initial wave is also happening right now for AI, but at a much bigger scale because it's more commercially viable, right? I think because it's somewhere, it's a software thing. It's not like a hardware. Oh, well, not everybody will need an EV. Well, production's hard. Well, the margins are not great. No. This is software. And so the capital is more readily available to AI companies. And so back in 2021, when you had maybe 20 or 25 EV companies, and 3 years later, 4 years later, you had 4. Today, you might have 200 AI companies. And then 4 years later, you might have 20. And so that's the thing that I'm concerned about is, okay, I kind of want to see how the game plays out. And even if some of these companies get to a higher valuation, I'm okay to buy it at a higher valuation, knowing that I'll take less risk, but I'm more secure that these ones are going to be the ones that are going to win out. Like if I see, so let's put it this way. If OpenAI right now is $500 billion and it's kind of like a perfect competition in terms of market share for LLMs out there, like it sort of changes between OpenAI and Grok and Gemini and all of these ones. I would much rather buy OpenAI at $1 trillion valuation 3 years from now, if and only if they're like 85% of the market share. And I know that that won't really go away. And I'm like, okay, cool. Like they clearly won that race. The consumers collectively chose them. And I'm paying double or triple what I would have been paying back in 2025. But I'm happy to do that because I have an assurance that they're going to be the ones to make it through.
Yeah.
Does that make sense?
Yeah. No, I agree with that. Like NVIDIA is not going to do probably what it did, 2 years ago as far as like the next year. We're not looking at 100% gains year over year, but 25, 30% CAGR over the next 5 years, I think is pretty much a layup. No, nothing's guaranteed. That said, okay, Tevis, We're going to talk about, we need to talk about Jeremy and the short thing. First, we need to talk Tesla and probably SoFi. So you want to do SoFi first, then Tesla, then Jeremy? And then
Let's
Q&A?
do SoFi really quickly because I don't want to give away too much for the FinTech Friday, but
yeah.
I think we'll just do a quick one.
You go ahead and cover it, and I'll add anything that might need to be added, but I'll
Yeah, so there's really three pieces of news for SoFi. Number one is that level 1 options is finally rolled out officially. And number two, I found it interesting, and we can talk about it or we can skip it, was the BTIG note. And then number three is, of course, the Derek White news.
BTIG note, remind me.
Where they basically issued an error around delinquencies.
Yeah,
and everything crashed.
Yeah.
So we can talk about all three, or we can talk about any one in between.
Maybe let's save the level 1 and Derek White for tomorrow, for FinTech Friday, if we actually do it on Friday for once.
Yeah.
But yeah, the BTIG correction with Upstart, that and it impacted SoFi and like anything related to lending.
Let me throw
and not everything's recovered either, which is just frustrating when this happens.
Yeah. Okay. So here we have where the note. This is from Manuel. A lot of people posted this. So BTIG, basically like one of these firms, posted a report on Sunday, and the dates is what I find the most frustrating about this whole thing. Is they posted something on Sunday mentioning the August weighted average 30-day plus delinquencies exceeding 11.2%, which is crazy, well above the 6 to 8% range that delinquencies have been in for the last 3 years. And then what they did is they came out and they corrected that. Oops, sorry guys, our bad. We made a typo. And actually, the delinquencies are just 6.2% up from 6.1%, basically negligible. And yeah, they've been rising steadily, but definitely not 11.2% what they initially thought. Now, the thing that frustrated me the most about this was the fact that the freaking correction came 2 days later after the market had closed. And so it's like you release a note on Sunday and then you correct yourself Tuesday after the market closes, and there's zero repercussions for you. And Upstart was down, Pagaya was down, SoFi was down. So many of these stocks were down as a result of algorithms, of course, but as a result of people like freaking the hell out around these delinquencies. And yeah, there's no repercussions for analysts. Oh, sorry, guys.
Yeah, I mean, like, I really hope this SEC looks into that. Well, at the very least, somebody's probably getting fired. It depends on what's happened. Like, if they find any sort of connection, not just with the individual that came out with this, but like with shorting positions, with friends, family, whatever, whoever did this is toast, and they should be. Hopefully, SEC comes down very, very hard. But yeah, it's ridiculous that it took that long to catch. I don't remember what company it was, but there was a massive error in their earnings, one of the numbers that they reported, but they were very quick to retract that. And of course, SEC investigates that sort of thing. So, but yeah, it impacted SoFi, it impacted everything related to lending. And if you look at numbers, like, that's the funny thing about the market is people are like, oh, the correction's issued, no problem. It's like, well, no, some of this stuff causes people to sell, or they get fearful, or they have stop losses. And when it turns out to be completely fake or even fraudulent, we don't know for sure. Man, it's terrible.
Yeah. And like, it's fine. Like, if they issued it on Sunday and they caught it Monday before the market opened, or even like an hour into market open, whatever, like, it's fine. But I think the most egregious thing is to let this go on for 2 days and then issue it after the market's closed on Tuesday. So it's like, oh, well, great. I can make a, decision on Wednesday now based on your data. It's just so ridiculous. And like, I think the important thing here is just to look at unusual whales and take a look at that options activity and see if there was some interesting options plays that were put on Friday. Because as is usually the case with this, like, I don't want to sound conspiratorial, but unfortunately it's conspiratorial for a reason. You get some crazy options volatility minutes or hours ahead of news that drastically changes the narrative for any stock. Like you saw some massive options activity on EA, and then EA was going to be taken private in a $55 billion deal by like the Saudis. And then some guy turned like $600 into $160,000 overnight. It was just ridiculous.
Yeah. Wild. Well, we'll save the other SoFi stuff for Friday.
What I will say, Roy, is I have some spicy takes on my thoughts around Derek White. So people just have to tune in to that tomorrow.
That sounds fun. Looking forward to it. Yeah.
It's gonna be fun.
I'll see if I put out a video beforehand or not on it. But let's do Tesla then, and then Jeremy. So Tesla, the biggest thing is delivery numbers. They came out today with the highest quarter ever. Quarter 3 is in totally for deliveries. First, Tevis, do deliveries actually still matter?
I mean, depends on who you ask, I guess. Like, I think if you asked like the perma bulls on Tesla, like nothing really matters except the vision 10 years from now. I think if you ask any analyst on the street, like, yeah, of course deliveries matter because they can project it, like they can model out essentially what they can expect. It's going to be interesting to see the repercussions of tax credits and the demand levers that they have. But yeah, I think this delivery numbers, I think the interesting nuance here with delivery numbers, and we can cover the delivery numbers, but really the nuance is Elon's sentiments ahead of delivery numbers. Because we've talked about the what is it? The poly market Elon tweet counter around whether or not they beat earnings based on how many tweets Elon does to signal how excited he is. And that's been pretty spot on. And I think you nailed it in our private DMs one night before. Roy sent me an Elon tweet, and somebody was like, I should be all in on Tesla. And Elon responded, yes, or that's a good choice. And Roy was like, delivery numbers blow out. And I was like, when are they reporting? And they're like, tomorrow. And lo and behold, delivery numbers blow out.
Yeah, of course the stock is down, but I mean, it's been running up a lot on narrative, basically. So here's the actual numbers. They also did report the energy storage. This is actually kind of interesting too, that if they do zero deployment of energy storage, which doesn't happen for Tesla, then they still have given a record in the last year. So in other words, 2025 has already exceeded what they did in 2024 without the last 3 months. This is a product too, which has tremendous tailwinds because of the high demand for energy in the country right now. A lot of it's ramping up too because of AI and data center projects. And this is on the commercial side mostly. So it's not really impacted by interest rates the way that it is on the consumer side. I thought this was really cool. Delivery numbers still do matter. It's more than a car company, but it's mostly a car company. Ford growth levers matter a lot, but this is a flywheel. And so, like, how are you going to sell full self-driving to people that don't own a car? Like, you don't. What about services? What about superchargers? Like, nobody's going to be buying a wall charger necessarily. So usually, like, the way it works is it's kind of like Apple, but not quite as extreme, where you buy your first Tesla product and that will not be your last. I guarantee it.
Yeah, I mean, I've said this before in podcasts. Apple devices are the Trojan horse into every household for them to sell their software and their subscriptions. And that's exactly the same thing with Tesla. The vehicles are the Trojan horse for full self-driving and all of the upgrades where they have pure margin on. So it's important to increase the fleet because not only can they train much faster with more vehicles on the streets, but they can also upsell full self-driving to more people.
Very true. All right, let's then look at The Big Short. And do you have his post up? Otherwise, I can pull it up.
Yeah, can you pull it up? I'll be right back.
Yeah. All right, here this is, and then there is one other post that he had related to it. So once Tevis gets back, we'll cover that. But if you guys aren't familiar, Jeremy has been a retail analyst, investor, YouTube figure for a long, long time. Somebody that I actually learned some things from. I watch his videos when I was brand new to everything. he does a good job breaking it down. This is a little unusual. I've not seen Jeremy actually short before. Maybe he has, and I'm just not aware of it.
Yeah, yes, he shorted Duolingo, or he bought puts on Duolingo, I think.
Oh yeah, that's right, and he exited pretty quickly. But
He's done it on many things. I think Brooks Brothers was one. He does it always as a hedge, though.
Yeah, and this is one where it's interesting. He said, I'm not only betting against Tesla stock, but I'm also betting against Palantir stock with an investment that's 2x leverage against Palantir. Take a look here. I want to slay, which is an interesting word there, hood, but I'm also trying to figure out how small hedges, if done right, can protect well from the downside. These three names are like 40% of my portfolio. So I'm like, why are you wanting to short me, Jeremy? But if you look at like what he's actually doing, here's the Palantir PLTZ. It's probably really hard to see. It's 0.39% of his portfolio. Some of it is he's down a little bit on it too. But this definitely is a hedge against like his long position of Palantir here. It's not him being bearish on the company or anything. Tesla, a little bit different. Here's his Tesla Z. He's of course up a lot, but he doesn't have a position in Tesla anymore. Robinhood, likewise, he's never been in Robinhood, from my knowledge. So I'm curious, A, what he means by slay, and B, do you think that these numbers, which are pretty small, like they total less than 1%, will those increase? And then C, is this going to work for him?
So, okay, I think I have a lot of respect for Jeremy. I mean, he's one of the OGs on YouTube content creators. I don't always agree with all of his picks, but I think we agree on more things than we disagree on. I think with regards to these, it's purely a publicity stunt. Like I don't think anything more than that. I have been in content creation long enough to like have a nose for when something is a publicity stunt versus when something is like an actual like conflict between content creators or whatever. I think in the case of Tesla, like he's been shit talking Tesla ever since he sold it. I don't think he regrets selling it though, even though, he comes out and he says like, oh, well, you guys are going to go to zero. Like, this is stupid. Like, I think he just does it to rile up bears because those posts always go viral and he does very well on those. In the case of Palantir, bro, pull up his portfolio again. Like, if you pull up his portfolio again, you can see that his short is 0.3% or whatever. But then he's still holding his entire Palantir position. And he has like, what, Roy, can you see it there? What is the amount?
It's not like a huge position for him, but it's like
250,000. What is it?
180,000.
Right. So it's like
a good bunch of it. It would have been bigger otherwise.
Right. So, okay. So if I'm holding $180,000 of a stock that has done a 10x in the last 2 years, and I think the market is toppy right now, would it be prudent of me to put on a short of $5,000? Probably. Like, I think if you frame it like that and you take Palantir or Tesla or Robinhood or like these names out of the equation, all you know is, okay, this stock has done over 100% this year. It's done about a 10x in general. And I think the market is going to pull back. Do you think I should put on a short that's 0.3% of my portfolio? Yeah, Tevis, probably a good idea. So like, I think from that perspective, I don't see it being a bad play, especially because Jeremy, even last month, he made a big deal about his Duolingo short to the point where like Joseph Carlson was commenting on it and whatever. And number one, he was right. This thing fell to 260. Like he totally nailed it. Number two, he closed out his short in a matter of days, right? I don't think it even was 2 weeks. Yeah. He closed it out early. But the point is like Jeremy can close out this short like next week by next Wednesday. Yeah. And it would have played out favorably for him.
And the nice thing about the way he's doing this is like this isn't the type of short where if you do short, I don't think retail really should usually. If you're a mega account, and I doubt that I know that this is not his whole account either. You don't want to do something where you risk unlimited downside if it goes wrong. But I'm kind of curious on Tesla. Like, so it doesn't feel like this with Palantir or Robinhood. Maybe we'll talk about in just a second. With Tesla, I'm kind of wondering if this is becoming emotional for him. And if so, like if he's investing and doing this based on emotion rather than just engagement, that's really, really dangerous. And that's one of the reasons why I don't think retail should short. And the other danger too is Jeremy understands, like, he has a huge portfolio. He loses 1%. That's no big deal. The problem is so many people follow him. They don't understand the risks of shorting. They may not do it through a levered ETF. They may instead actually just short. And of course, Robinhood is opening that up to bears too. You can short a lot of portfolios and in brokerages. You can. You might not just lose the money that you put towards that. I mean, you get money from it, but you can lose everything. And so the last thing is, like, there are companies out there that are being disrupted left and right that are just dead in the water. It's just a matter of time. And the market usually treats them that way, but they can go down a lot further, ultimately to zero. To short a company just based on valuation that is absolutely killing it as far as execution is a big, big danger. Robinhood and Palantir, I think, are those two companies. Palantir is ridiculously expensive, and Robinhood is expensive. I won't say it's ridiculously so. If you look at either of them, like, they are leaders in their fields. They are dominant. They have ridiculous culture. Like, if somebody's bearish on the company rather than the valuation of the stock, like, I don't know what they're seeing, but they're just wrong. Could the share price go down on either? Absolutely, especially in macro. But, like, just betting against momentum and high valuation alone, I think, is a really risky thing to do, and you're not going to have that high of a win rate.
Yeah, I agree with everything you're saying. I also think that, like, okay, let's put it this way, guys. Let me level set with you, okay? I'm a content creator like Jeremy, and I have 750,000 followers. Okay, 700. I think that's what he has, like 700 something thousand, probably close to 1 million followers by now on his main account. Okay, I probably clear over 25K a month on YouTube, right? I can make you guys the most egregious rage bait posts around shorting all of your favorite darlings, and I would still make more money at the end of the month through just the YouTube views from that rage bait than if that short went to zero. And not a pure short. I mean, like, if I buy a 2x levered ETF and it goes to because a pure short is like unlimited, you know. So anyways, my point is like, you got to think of, like, the business aspect of this as a content creator. And this is one of the reasons why I got super turned off from Meet Kevin, because he would make these posts with, like, a face like this, and he would be like, I sold completely out of Tesla and I'm shorting it. And then 2 days later, he'd be like, I'm all in Tesla. And it became like an extreme flip-floppy thing. Now, I don't think Jeremy does that. I think for the most part, Jeremy's a straight shooter. He's been holding stocks for years. And does he take advantage of the publicity around, you know, the tantalizing effect of saying, oh my God, I'm shorting Palantir 2x short, when all he's doing is really just putting on a hedge? Sure. But is it to the point where he's like a full day trader now, like me, Kevin is? No. And so I do think there is a content creator thing there that I'm not reading into. But I think it's going to piss off a lot of people. I don't know if the Tesla thing is getting personal. I think that's an interesting take.
Yeah, I mean, I don't know him personally, but just like seeing what he's saying on X, I don't have time to watch many videos, and so I'm not watching Jeremy these days. No hate on him, no shade. I got a lot of value out of Jeremy back in 2020, 2021. Meet Kevin too, honestly. But yeah, we'll have to see. Now, the Robinhood one, that's one. Actually, before I talk about the Robinhood part here, so Tevis, you know, talking about doing shorts, you know, as a way to hedge. When are you shorting SOFI?
Oh, okay. See, that's an interesting thing, Roy, because I can come out with a killer video and I can make a post go viral on X saying I'm shorting SOFI because Derek White, you know, so-and-so, Anthony Noto fired Derek White. Like, I can just make it the craziest thing. And then when I show you my portfolio reveal at the end of the month, my short for SOFI is like $200. And it's like, I'll lose more on NFL tonight than that short. So
short one share, actually. Just
yeah,
like
exactly.
One. I mean, that's the thing. You got to read beyond the headlines. And part of the thing with YouTube is, you have to use a little bit of clickbait, which I'm trying not to put things that are lies there at all, like ever, but things that get people's interest rather than tell the whole story. Tanner and I practice the "What would Tevis do" take, as far as, because you're really good with titles, so that's been helpful. So the Robin Hood part, I want to slay Hood also, but trying to figure out how. Do you think that this is him doing something different on Robin Hood, like that's higher, or is this going to also be like a little 1/3% type of thing?
Dude, do you want to hear my conspiratorial take? And I got to plug this in just a second. My conspiratorial, actually, let me plug this in and then I'll tell you.
Okay. Yeah, and then, by the way, guys, we're about to take your questions and answers right after this. We'll spend about maybe 30 minutes or so doing a quick fire one. So if you have questions, whether they're related to things that we talked about tonight or completely unrelated, we'll try to get to those. Some of the answers, honestly, guys, we'll shoot you straight. We'll just be like, I don't know, never heard of this, didn't think about that before, very interesting. Just because we respect you guys. We're not going to be here and make up things that we don't know. There's plenty I get wrong too, but I'd rather not just speak with authority on something I have no idea about.
And if you stay at the end of this, and if you ask nicely, I might tell you the parlay that I'm going to be putting on tonight. Okay, so what was the question, Roy?
Robin Hood, the conspiracy thing that you said, and Jeremy saying that he's looking to slay Hood.
So I've been, again, like I said, I think I'm trying to be honest to the situation, but also not like critical, but not jabbing someone, because I do like there was a role that Jeremy played. I mean, I've been to his house. We played poker together. He like took all my money in poker. So he's a good guy, and he's a great content creator. And I think he has nailed down the formula, and it's very evident in the following that he's amassed. He's been doing this for years, well before me, well before you or Tanner. And so I've had the opportunity to see his tweets, and his tweets don't correspond with his videos. His tweets have lately become super rage baity or super viral, and like I find them interesting, and like I can kind of tell it's like satirical to some degree, where he's like poking the bear on purpose with Twitter, and he's leaning into it fully. Like, so for example, I sold Palantir and people shat on me completely for like 2 months, and I didn't really respond to any of those people because I'm like, kind of like an overly serious guy. I think you guys probably wouldn't believe me, but just in my normal life. But like, if I were Jeremy, I'd probably be talking shit about Palantir like Dividend Dude from $10 all the way to $200, and just collecting all of that engagement, just farming all of that engagement. I think my conspiratorial thing is I don't even think it's Jeremy doing it. I think he has somebody doing his social media on X. And I think it's like, hey, if you can grow this account to X, then you do whatever you want, because you'll see something that he posts and it's like, you just are like, what the hell did he just say? And then you watch his video and it sounds super grounded and rational and like it makes sense. And so I just think he's either very, very, very good at baiting himself, or he just has some social media guy doing his X for him.
Yeah, could be. No, that makes sense. Q&A time?
Q&A time. Okay. Yeah, his videos and his tweets are completely different. Maybe he needs some emergency. I mean, the guy has like 3 homes, so I wouldn't bash 3 homes in like 3 different states or something like that. Okay, let us begin. And I want to get this over with before the football game starts, because I want to gamble tonight, boys. So
on Robinhood, right? You wish.
I wish, dude. I wish. Vlad, get it together, man. Come to Canada, please.
Dude, like real quick as we get into the Q&As, and I see you have a bunch there. Robinhood on the predictions market, like I shared this with the guys on Tech Bros Weekly. I don't remember if I put that in the video on Robinhood that I did. I think that they'll hit between a $400 and $500 million annual run rate next year with predictions markets alone, from a product that didn't exist before February of this year. It's insane.
Yeah. Yeah, and I think like I was seeing the chat between you and DDI, and you were saying like, well, Robinhood's not cheap. I don't think anybody can argue that. But it's also like once you factor in the predictions thing that like 6 months ago wasn't even in the equation, like it's also not like it's not insanely overvalued, right? Yes, you did miss the SoFi talk. Roy, I think, does timestamps, so you can rewind back and
Yeah, I
catch it.
just added them to mine, and I'll share them with Tevis so you can get them from him too.
Okay, what can you speak of the momentum on Open Door? Roy actually made a full video on this, so definitely make sure to check that out. Roy, you want to plug it?
Yeah, just real quick. Yeah, it's on Open, and I think I entitled it like "This Guy Bet Big on Open," and here's his next bet or something like that. And we looked at Better BETR. Won't talk too much about that because that's not what the question is. Which I think it's actually a solid company. It's probably undervalued, but the problem is both stocks are trading like memes, and they're being treated like memes. And you have basically, for the most part, the same people that are in one play or the other or both. And so it's kind of like having two big Stanley thingamajigs. And so you fill one up with water, the other's empty. Well, then you start filling up the one that's empty, but you have the exact same amount of water. And that's what we've been seeing as far as the price momentum and price action. Now, on Open Door itself, I believe Kaz is like a really good hire for CEO. I like what he's doing as far as like even just like little things of positioning the desk like in the middle of the workflow instead of ignoring everything around him. He's going to bring a very healthy culture from Shopify. Some people will get on board. Some people need to be fired. Like these sort of turnarounds take time. It's not going to be Kaz is here. We're good in 3 months. But he's igniting a lot of interest in Open Door as far as how they do the company and everything. So like, I still think it's a meme. I still think it's way overpriced. Open Door has been a terrible run company. He's a really good CEO. So we'll have to see if he can turn it around. The other thing to watch and keep an eye on is if Open Door actually starts increasing quite a bit in price. They really need to, and I think that they should do a dilution because actually at that point it's actually accretive. They can use that money for a lot of different projects. There's a lot of different ideas circulating there. So I'm not in Open Door. I'm not betting against it. I think it's dumb to bet against momentum like that. But I think mostly it's just taking money that's reserved for Open Door, pouring it in better, then pouring some back and forth. So sometimes they're in lockstep just with the general macro, but usually if one's up big, the other's down. We saw this, by the way, with AMC and GameStop back, in 2021. So
Wow.
now it's in AMC. So
okay, let's I found this funny. Yeah, I couldn't care less about Open Door, guys. I'm sorry. Love you guys, but I don't want to get into Open Door. And Paul, you know me very well, my friend. You know me very well. No SBet. Sorry, Katie. We are investing in the big players. And we talked about this last time. One of the big reasons why BMNR over SBet is because they're accumulating more, they're accumulating faster, and they're already the number one, and they plan on extending that gap between the rest.
Yeah, I also have a video. I think we probably all do, but mine's on is BMNR the best Ethereum treasury or something like that. I go through SBet. I like SBet. I like TSLA. I'm not investing any in those. It's all BMNR, and there's several reasons and advantages that I think that they have. Even though SBet's doing some good things, and I kind of hope they make it.
Yeah, and I'm sure everybody will do well if Ethereum does well because Ethereum is going to be the rising tide, right? And the same answer applies on Bit Digital. I don't know, Roy, if you have to.
BT, yeah. That's Ethereum, kind of. Ethereum, Bitcoin, like a bunch. Like they don't have like a set strategy. They're just a digital asset treasury that whatever they want to buy there. They're like actually at like 2 times MNAV, which is interesting. Like they're doing better on that than BMNR. I don't know. I don't think I like that as much as I like the focus. With BMNR, they have the flexibility, but they're very focused on the Ethereum acquisition, and they're going to get there at 5% relatively soon. So it's interesting, but yeah, give me BMNR.
Okay. And I kind of want to skip the line. So first of all, thank you, GS, for becoming a member, and I really appreciate that. And I want to throw this up, Roy. BMNR acquiring ETHZilla. And the reason I want to throw that up is because don't forget, guys, and I made a video about this, ETHZilla has like a special announcement on, I believe it's October 7th. I'm going to find the date for you guys before this video ends, but I'm pretty sure it's October 7th or October 9th, where they're going to be announcing something. They raised money recently. Basically, when BMNR raised money, they also did. Ken Griffin, and I'm sure we know Ken Griffin well, Roy, from the 2020 days.
My cousin.
He reported a 5.3% position through his controlling interest in Citadel in ETHZilla. So Ken Griffin is banking on ETHZilla, and there's been some chatter around whether BMNR could potentially buy ETHZilla, and there's a announcement coming on October 7th. Thank you, Christine. So, I think it could be some really interesting stuff there. Paul, thank you for the 50 New Zealand dollars. Whenever I visit New Zealand, I will have many beers on you, or however many 50 New Zealand dollars buys. Thank you, sir.
Yeah, it's better than Canadian bucks. So, yeah, I don't know. I think that it's probably too early for much consolidation in the digital asset treasury world. It can happen. The golden parachute clause is not necessarily a tell more than they realize. If they're trading undervalued for a long time, at some point they will sell, and so it's just nice to have that parachute clause in there. If they do acquire it, that's fine. It'll be right around MNAV or NAV, so we'll have to see. But I would be a little bit surprised, especially like the way BMNR has been acquiring. What may actually happen if there's an acquisition is SBET acquiring ETHZilla. Reason why I say that is we saw SBET acquire almost nothing during the downturn. They're just trading MNAV right now. They realize, like, hey, if we don't re-excite investors, if we don't start trading above MNAV, we're no better than ETHZilla. We're just kind of stuck here and staking. And they're doing some interesting things. Like these are two, I think, solid treasury companies. But I think that they realize, like, if they want to break in and be known as like a top three, they have to make a major move. And so them announcing that they're going to tokenize their own stock and put it on the ETHZilla chain, that didn't move the needle much. They mentioned some things as far as lending and some different projects that they're in. Didn't really move the needle much. This could. So if there's an acquisition, that's my bet. It's SBET acquires ETHZilla, and they do that with their shares.
Yeah, well, so, okay, now that we know that there is going to be some news dropping in the next week, right? Or within the next 7 days or so, like, is the play here to buy some ETHZilla, to buy some ETHZilla calls? Like, what do we think? Like, if we think an acquisition is on the table and we know that there's a date when news is going to drop for some special event, what are we thinking here, Roy?
I actually bought briefly some shares in ETHZilla, and I was like, no, I'm going to buy more BMNR.
Yeah, well, okay, fair enough.
I don't know. I might do like a 1% like speculative bet on some options just for that date, and not even probably 1% if they're options or just shares. The shares are cheap. I vaguely remember the options chain being terrible on ETHZilla, so that may not be the play. But yeah, maybe I'll do a little speculation there, but I'm not expecting it. Nice thing is if you just do shares, maybe the shares will go up, maybe they'll go down, but they're probably not going to sell off on October 7th. I'm not seeing, unless something changed in the last few days, no change in price momentum. I know it's probably up a little bit because Ethereum's up, but
yeah. T. Nelly says, I stopped watching all the clickbait stock channels long ago. I'm heavy into Tesla, and I can't even watch Tesla hyperbull channels anymore. Hope your crew will always remain honest to a fault. Thank you, T. Nelly. Really appreciate that. Very kind words. And shall we move on from the SBET acquisition, right? Mm-hmm. Or ETHZilla acquisition? Okay, let's see. Do we believe the lack of execution with SOFI product rollout is white, or is there a bigger concern? Josh, my friend, I am very glad you asked that. Hold that thought for 24 hours.
Yeah, I was going to say, let's talk about that tomorrow.
Thank you, Josh, for that question. Roy Tanner, who's not even on the show, dude. And what happens when BMNR gets to 10%? Okay, so you answered this. Yeah. Cool. Have you seen the IRS 15% corporate tax has been ditched for unrealized gains on crypto? U.S. Treasury and Yahoo reporting.
Oh, very cool. I hadn't seen that. No. I mean, that should have never been a thing. Unrealized gains. Give me a break.
Yeah, I mean, it's a slippery slope.
Yeah.
Everyone is talking about BMNR. So HIMS is done.
Yes, they're direct competitors, and BMNR is no, just kidding. No, like quality companies. So I'm in PayPal. I'm in PayPal. I know it's getting a little bit more momentum from retail right now. For I don't know why. Like I can't figure it out. It's not me. But like I'm thankful for it. It's more volatile than normal. Like it'll go up 3 or 4% for no reason, down 5 for no reason. I'm like, this is weird. But just because people stopped talking about PayPal and ignored it is like it's a real company making real money, like a lot of money over the next 2 quarters too. It doesn't take anything away from it, and it doesn't mean that the stock won't move once the market realizes it made a mistake. HIMS is the same way. I mentioned, and we talked about this, Tevis, that there was some short-term bearishness and concerns, and some of those have been addressed, and some of them haven't. The core needs to reaccelerate as far as revenue. Right now, they have a very beautiful year-over-year revenue growth rate, but that's not going to persist, for much longer. They have harder comps that are coming up. So I still think short-term HIMS is, as a stock, maybe going to struggle, even while the company is doing very well, launching testosterone. Of course, they are launching semaglutide up in Canada, starting in January. I think January 6th. It's very, very early in January. It doesn't really matter. Of course, they're talking about the hormone replacement stuff for females as well. There's a lot of stuff that they're doing well. Weight loss is still a good category for them. And of course, they have their acquisition that Zava that they're building out of. So still long term, I think everything's intact and going to do very well over the through 2030. There will be ups and downs. This is one of those times where I'm like, at the valuation that HIMS is at, I'm not buying anymore here. I'm not selling my position either. I've been very careful with covered calls. But I think that there's a scenario where maybe they have a bad quarter and they report that and they trade way under where they should be. I will add a bunch of HIMS at that point. So I don't think HIMS is done.
I'm bullish HIMS. I mean, HIMS is in my top 5 positions. I will give you a bearish take on HIMS. Roy, did you see the HIMS news today?
I did, yeah. I didn't have time to look into it in detail, though.
Let me share it for you real quick. So Andrew Dunham, the CEO of HIMS, said, today I shared some news with the team. Nader Kabani, who joined as, and I'm probably butchering that name, I'm sorry, guys, who joined as the chief operating officer like 5 months ago, is stepping into a new advisory role, working with me and the exec team on global initiatives. Nobody knows how to scale beloved tech and healthcare companies like Nader, and I'm excited for him to focus on the future. At the same time, Mike Chi, one of my most trusted partners, is taking on an expanded role as a new COO. Blah, 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 blah. Okay, cool. So basically, they hired a CEO from Amazon that scaled the Amazon pharmacy, that scaled logistics, that was with Amazon for 20 years. And suddenly, this man who was with Amazon for 20 years was with HIMS in the COO position for 5 months and now jumps into a new advisory role. And by the way, new advisory role, this is like saving face, I think, in many ways. I've had people jump from C-suite roles to an advisory role that we've communicated with the company, and in reality, it's been like 1 meeting a month.
That's really what it is, yeah. It's very minimal. It's basically them saying this wasn't the right fit, which honestly, when he was brought on, I'm like, this is great. This is who they need. Yes. So that's weird.
Yes. So, yeah, not even Nate is not bullish on this, which is saying a lot.
Right.
Forced them out. Okay. So, anyways, that is that news with regards to him. Sorry to burst your bubble, guys. I still believe in him, so I don't think they're done. I just don't think that's also good news.
Did you sell all your HIMS?
No, I didn't even sell my HIMS. I should sell my Leafs at least.
You should actually, honestly. You got to take profits on options. So,
serious question: are you guys going to wrap before Thursday Night Football? I can always dual stream both, I suppose. All right. Football starts in 18 minutes and 55 seconds. Don't ask me why that's so accurate. We got plenty of time, Matthew. Okay.
Yeah, this is your pregame warm up. So
this is yeah, exactly. Just pretend I'm at the announcer talking about the game right now. How high do you think SoFi can go in the next 1 year? $45.
I'll see your 45 and raise you $50.
Okay, sounds good.
As
Call.
long as bull market's intact, macro's fine. Rate cuts really fuel things. They're launching a lot of products. Some I'm skeptical on, but I mean, just with the lending side and what they can do with lending with crypto, I mean, it's going to impress, I think, the market. And the market understands now. Like there was news that came out with SoFi that we'll probably talk more about tomorrow that would normally send the stock spiraling down more, and it didn't. So I think the narrative has changed, and as long as macro is intact, yeah, a double, from now until into next year, I don't think it's crazy.
Agreed. I don't think it's crazy either. Could they have been working with other firms to let them get in? Oh, this is the BTIG. So could BTIG have been colluding or doing some illegal shit, basically? Yes, they could have.
I would say no. Like at a company level, no. Individuals in the company that were responsible for that, yes.
I mean, BTIG is like, aren't they owned by like Goldman?
They're massive, so I don't know who owns them, but
anyways, it's a possibility. Probably unlikely. Did you look at BKK2 Momentum, Roy?
Do you know what Backed is?
It's like a crypto thing. They're a brokerage?
Yeah. No, not exactly. Most of what they do is on the back end. They provided services. I don't know if they did for SoFi at one point, but Public was one. And there were several brokerages where they basically empowered the crypto trading stuff. Throw this up real quick, Tevis, just so people can see. This is over the last week. It's up 155%, which is funny because last week, I think I posted on Thursday, like right before it started running up or not too long before it ran up, that Public divested from them, that they're actually going after Zero. It's not Zero Hedge. It's the one that SoFi just invested some money in, along with Morgan Stanley and the others.
Zero Hash or something?
Zero Hash. Thank you. Yes. I was like, Zero Hedge was stuck in my mind. So I have no, Varun did share a few things regarding why, they settled some debt. They were trading way under value, those sort of things. But what's interesting is a lot of people are pivoting away from using Backed as services. So we'll have to see, but I'm not in on that one.
Cool. Question is, when is Tevis going to buy into PayPal? He can easily degen into some spreads. Honestly, probably not a bad idea to go into some PayPal spreads. I might actually look into that just because I think what how's it been, like 3 years, 4 years? I think that's long enough. And market is what's PayPal at, Roy? It's still under 70, right?
Yeah. It'll break 70 for like a day and then it'll fall to 65. It doesn't matter if there's news, if macro's good or whatever. 70 is like impossible resistance for right now.
Yeah. Okay. So maybe some spreads into PayPal, Matthew. It's not a bad idea. Am I an upstart? No, sir. I am in SoFi. Thank you for your question. Are you an upstart, Roy?
No. Why would I invest in inferior companies? I mean, they're not trash, but like SoFi is just so much better positioned, stable, profitable. Knows that I mean, like, give me a break.
Yeah.
As a trade, I have traded upstart before.
So let me ask you a hypothetical. What if tomorrow it's announced that Derek White is the new CEO of Upstart?
That's not happening. He could be entering an interesting role that relates to SoFi in a very positive way, even though he's not at SoFi, but we'll have to see.
Okay. And we're going to talk about that more tomorrow. Are we in the clean spark run? No. Had it, lost money on it, not touching it. Thank you.
Give me BMNR.
Yeah. Till what amount is Nebula still a buy? Well, I mean, I bought it at like 120 was my latest purchase. I bought it at like 50. 55 was my earliest purchase. So, I mean, I think it's fine. I want to be like, dude, you're getting somebody put a $500 price target on it. And you're talking about at what amount is it still a buy? Like, what are you saying right now, dude? It's literally $31 billion market cap.
Yeah.
Which, now that I say that out loud, sounds like a lot. But OpenAI is $500 billion. So, like, give it a rest, man. You're going to be fine. So, like, the Amazon deal alone was like, what, $19 billion? So I think you're fine, honestly. Obviously, do your own homework, please. Don't lose all your money. What are the chances that SoFi goes below $25 from now until earnings? It appears the government shutdown isn't having a significant impact.
Yeah, 50-50. I mean, earnings are not that far away. We could have a pullback. We didn't have much of one in September. And for whatever reason, SoFi kind of lost some of its momentum. Part of that was that their report earlier that was retracted on Upstart. But yeah, so it wouldn't shock me. Usually SoFi likes to run up into earnings, but it's been running up a lot. So we may not see that this time.
Yeah. I think, well, until earnings, that's like 3 weeks from now. I mean, I guess you could have it, but I mean, whatever. It doesn't really matter.
Yeah, I mean, I think most likely is we're just going to kind of be in this range. You know, maybe it'll be 27, 23. We're up a lot, so it's fine.
All right, let me read some of these comments real quick. Roy is spicy this episode. PayPal will see 63 first before 72. Okay.
Yeah, 72 above 70, so of course.
George, we'll cover that in the queue. What does Upstart even do? Ask Mark. What's his name? Mark. Something with an R.
If you guys are not familiar with it, don't do it right after you're watching this, but you look on YouTube and type that in. It's the most funny thing.
Mark Ranieri or something. That name is like purged into my brain from that clip.
Yeah, I don't remember him. I know what he looks like though.
Upstart Mark. Anyways, it doesn't matter. I'm gonna get carried away. Nate says, now we're speaking my language. We did for like 30 seconds on Nebius. Welcome. He says they're gonna do $3 to $5 billion in revenue next year. $31 billion is cheap. How can you argue with Nate? Nate will skewer you on X if you talk anything that is not bullish about Nebius. Like, I've seen people who are like, I don't think Nebius is going to keep it up. And Nate's like, really? Paragraphs. Okay, cool. Roy, question, thoughts on question, hard to be here. Okay, great. Back to questions. Intel, are we missing this?
Yeah. I mean, Tevis talked about it previously, like, hey, should we go in for a swing trade on this? I was like, it makes sense. I didn't, just about more BMNR. So, but yeah, I mean, I still am pretty bearish on the company, but enough people want to throw money at it. Like, it's hard to see them continue to fail and trip over themselves. Yeah.
I think they have good backing with the NVIDIA and the U.S. government. And do I think it's a great company? Well, the market doesn't seem to think so with their products. So we'll see. What do you think about Rich Tech Robotics? Chris and Sam were looking into it, Robert says. Look, I think Chris and Sam are both great analysts in the retail investment community, so I trust anything that they're talking about. I haven't looked into it myself, nor do I know anything about them. Are you guys looking to get into energy, or do you think it ran too much with little to show? Is this an Oklo question?
I mean, kind of. Like, Oklo, I wouldn't invest in. I think Oklo has run up too much. It was one that I had my eye on. But, I think solar, the market is sleeping on. A lot of it is just, the administration is very negative on green energy, so it's not good. I think at some point energy demand is so high that they'll be forced to pivot. There are other ways to play it too. Like, Next is one of those. It's like a solar panel tracker. There's a lot of like, okay, well, if you have energy, then you need more of derivative type of plays. So that's how I'd play it if I was going to get into it. I'm still doing research, still thinking through it. The demand is very clearly there, and some of the projects like nuclear and uranium, people are mentioning that too, have played out very well, but it's a long ways away before they actually have these plants up and running.
Mm-hmm. Thank you, generic YouTube user, for loving the content. Very much appreciate that. Nate posted that there's multiple responses saying that the Nebius $500 price target is fake. Yeah, I mean, like I've been on stream for the last hour and a half, so if Nate says it's fake, then I'll trust him on that. At least they didn't take 2 days to correct it.
Yes.
Tevis, did you get into Next? Yeah, I bought I think 1,200 shares or something. I also have cash secured puts on Next at like $7 or $7.50, which are kind of underwater, but that's fine. I think those are for end of October.
Now
And
remind me, is
so
that the solar tracking one or is that a LNG play?
that's LNG play. Yeah.
LNG, okay.
Next is going to be it's a small position. Basically, my apology to Matt Money in asking him to take me back, but he won't. So we'll see how that one goes. But there's some bullish prospects, I think, for Next coming up. And I don't think I want to build it into like a massive position. I'm just going to keep it small for right now. But I couldn't not buy after it dipped to like $6 when it was trading for 10 to 12 before. And if you want more information on Next, definitely follow the third season of Cash Flow Chronicles. I think episode 2 or episode 3, they did like entirely on Next, talking about the FIDs on trains 4 and then the future revenues that they can make and everything that Chris and Matt were talking about. They're very knowledgeable about that. So definitely want to plug those guys. Great channel.
Yeah. The other energy thing that I was looking at is recently IPO'd Fermi, Rick Perry in Texas. It's an energy park more than any other play. And I don't know, but it's interesting. So I'm just kind of thinking through things.
What do you mean as well? I was the OG Bricks just because Amit is like 20 times my audience. Doesn't mean, oh man, this now you guys are taking the bricks away from me. This is ridiculous. Could you guys elaborate on what the PayPal options activity could mean for the stock price? Roy, do you know about this?
Yeah, I mean, that's part of the reason why the stock has been moving pretty violently is there's a lot of speculation, both in the stock and also in options. I don't know. I know PayPal well, and I'm not seeing any like thing that's shifted as far as the company. Like there's been plenty of things. If this happened right after the Google news, I'd be like, okay, well, it's the Google partnership and them being a key payment service provider for them is like really huge. The market gave them like a 1.5% premium that day. So it's clearly not related to that. There's little announcements here and there that are neat, that are really good, but I have no idea. I think there's just a lot of people that overlook PayPal for the longest time, and now they're looking for opportunities, and they're like, okay, yeah, PayPal is an opportunity, which I've been saying. It's been an opportunity cost, though, to be fair.
Okay, there's still like 8 questions left. We have to wrap this in the next 5 minutes because football starts and I need to place my wagers.
Rapido.
Nebius Hymns, bullish on both, own both, love both. Next question. Does Roy think BETR might be diluted as well as open?
Yes. And they're a real company, good company.
Have you guys thought about starting a public profile, potentially make videos how you're growing your portfolio? I have done a couple of those videos. They're locked behind the paywall for members. I want to try to do those more often. So become a member.
And I'll do a portfolio update sometime over the next week, but it's always percent, not showing you the monetary amount. I'm not a massive well, but there's some reasons why I don't do that.
Roy, what's your graduate degree you're working on?
PhD. I already have a graduate. So,
okay. Any thoughts on today's momentum in SOFI versus the last 7 days of red?
I mean, the note correction helped, but you can't sell off forever. So. And it's attractive here, honestly.
Yeah, and I think everything flew today. Thoughts on APLD? I have 0 thoughts. What is that? Applied Digital? I don't know.
Oh, yeah, I do know it. I don't know it well though. I'm not knowledgeable enough on it. Sorry.
Which game the Rams are playing? San Francisco, and your boy's betting on the Rams, and Kyron Williams getting a TD. So. Take that to the bank. Not financial advice. Where's my banner? Here you go. Okay. Can you guys, do you guys have any thoughts on SPGI, or is it too boring?
I mean, like the actual company SP 500 Global, no, thank you. Like they I don't know, like their decision making with who gets in, their technology in the back end. There are things that benefit the company, I think, overall, but I'd just rather invest in the SPY if I was going to do that instead of them directly.
Yeah, I have zero thoughts on it. Thank you. Next, any interest in Oracle with a pullback from 350 to 280? Where were you before Oracle blew up, dude? Like,
yeah, it's in my paper account. You know, we're betting against each other, but no, not really. I prefer a very concentrated portfolio. Here's, by the way, predictions market on the Rams and Giants, up to almost over 9 million contracts. So it just made it cool.
There's that much money on the Rams. That makes me nervous.
Overwhelmingly predicting Rams. Yeah, San Francisco is at 22 cents. So
okay. Okay. Thank you, everybody, for watching. I really appreciate it. We have 3 minutes left, and I will say that, you know, I had a conversation recently, and this person said, "Oh, why do you work so much?" Because I literally just got home at 6 p.m. and I haven't even eaten, and I just jumped on the stream. And my response was, "This doesn't feel like work," and it really doesn't feel like work. I'm just shooting the shit with 200 strangers on the internet. Many of you guys I know only through your usernames and my buddy Roy, and that is good enough for me.
Yeah, this is a hobby for me. I enjoy it, and I think I'm gonna join you, Tevis. Do a little bet on 49ers, even though I normally don't do that, just for fun. For you, couple bucks.
I got to bet on New Zealand cricket because of Paul, and I also am going to bet on the Rams and the Kyron Williams TD. We'll check in on that bet tomorrow. But until then, see you guys, and we will see you back at Bootleg Weekly Tuesday. So definitely tune in for that. Bye-bye now.